Hey everyone, and welcome back to another episode of The Negotiation, where I had the esteemed pleasure of interviewing an old friend of mine from China, Mr. Bertrand Schmitt, the co-founder and chairman of App Annie and co-host of the podcast Tech Deciphered. We talk about how Bertrand and his team have spent the last decade creating the industry's most complete mobile performance platform while being based in Beijing, raising $160 million in funding along the way, and why it was important that a significant part of that amount come from local Chinese investors. We look back at the evolution of mobile in China and talk about how far they've come in the app industry and discuss tech areas that China has now taken the global lead in innovation in. We also talk about the two biggest mobile players in China, Huawei and Xiaomi, and what the future holds for them given the relatively harsher climate they face outside China. Enjoy.
Anybody with some scale can build an off-the-shelf phone based on off-the-shelf components. At some point, it's your operational efficiency first and for all. So it's a bit more dangerous game. I think the ones that are more vertically approaching phone manufacturing from Samsung to Huawei to Apple have a big advantage. They can drive innovation much better. They don't depend on the latest design from Qualcomm. I'm more bullish on the ones who control more their own destiny, but obviously in that game only Apple fully controls their own destiny because they also own the operating system.
Home to over 4 billion people, the Asia-Pacific region boasts one of the most powerful consumer markets on the planet. Not only is it home to half the world's under 30 population, but it's also home to more than half the world's internet users. It's a market no globally minded brand should ignore, but entering markets like China is no easy task. Just ask the likes of Microsoft, Google, Uber, and Facebook. Times are changing, and with the right partners, doors are slowly opening as more and more companies find success expanding into the markets of the Middle Kingdom. I myself spent 8 years in China, mostly as a venture capitalist, helping early-stage tech companies enter the Asia-Pacific market successfully. This show is dedicated to uncovering and examining successful China entry and growth strategies by interviewing the people behind those success stories. My name is Todd Embley, and welcome to The Negotiation, brought to you by WPIC Marketing and Technologies.
Bertrand, welcome to the show. Thanks for coming on.
Hey Todd, thanks for having me today.
We go back a ways, and we'll get into that later, but why don't we start with a bit of your background. How did you end up in China? What were you doing there in the early days?
Yeah, sure. My first trip in China was in 2004. I visited Beijing, Shanghai, Hong Kong. I like it. I like the entrepreneurial spirit at the time. But in 2004, I felt there was not enough tech for me. I've always been working in the tech industry. That's what I love. That's my passion. Mm-hmm. And then I went back in 2007 and I felt a difference already more, probably coming from more VC investments, some more local companies that were starting to get bigger as a successful tech business, and saw that there was more ability to hire people, senior professionals in that industry that I was not sure was there just a few years before. So starting that point, I made the decision to move to China. And to give you a bit more of my background, I'm French, so European. I studied in the US, did my MBA at Wharton. But even if I have a background in computer science, engineering. So for me, I've lived and worked in Europe. In US, I felt that Asia was that last big piece that could be very interesting to work and live in, that I didn't really know that much. So for me, spending more time in Asia was part of growing as a professional. And I felt that definitely China was one of the most exciting places, especially if you have an entrepreneurial spirit, given how many entrepreneurs you can find in China and how fast the country was developing, especially at this time.
I was going to ask you, did you move around a bit in the early days, and could you tell whether there was a difference in the entrepreneurial or innovation spirit in different cities?
I mean, what I liked at the time in China, that was the only place I knew, at least at the time, where I could meet entrepreneurs with 3 business cards, running 3 different business, or 1 business card, with 3 different business on it.
Yeah.
I've seen 2 in many other places, but never 3 that I only saw in China. And I think, yes, of course, I feel that you have differences. As you know, Shanghai is much more international. Beijing is less international, but much more tech heavy. And that's why I spent out of 6 years in China, 5 years in Beijing, 1 year in Shanghai. And obviously, if you're looking more for finance function, Hong Kong or trade, Hong Kong is probably a great place. So that's and that's probably why I ended up in Beijing. It's not the weather. I don't think it's the best weather you can find in China. But if you're in the tech industry, that's the best place. As you probably know, I believe 50% of all this investment in China is done towards Beijing-based companies.
You are co-founder and former CEO of App Annie. Tell us not only what App Annie is or does in your own words so that I don't butcher it myself, but also, were you in China when you started it? What were the symptoms of the problem that you were seeing that led you to build this solution?
Yes, so I've been in the mobile industry since 1999. So I was there, and not just mobile industry, but the mobile internet and mobile application space since 99. So basically, if you are from Europe, you might remember WAP, the Wireless Application Protocol. If you were in the US, you might remember Brew. If you were in Japan, you might remember iMod. So I was in the middle of all of this since 99. And I saw it through growing pains. And at the same time, I saw the regular fixed broadband internet getting better and better and more interesting in terms of business opportunities. Up to a point when in 2007, I was starting to think, hey, you know what? Maybe I should just go to the regular internet industry because opportunities are better there, and it just doesn't seem to never really work in terms of value proposition in that industry, except for carriers, obviously, and some handset manufacturers. But the overall software and publishing industry was really nowhere where it was really that much of a good business. So, but then the iPhone came in 2007, and more important came in 2008, the App Store. And having been so long in that space, I saw very quickly that it was the best invention you could make, because it was solving in one go three big issues. One was discovery. As consumer, you want to discover content easily. Two is distribution. If you have found the content, you want to be able to install it easily, access it easily. And three, monetization. You want people to be able to pay easily for stuff they bought, and for publishers to sell easily what they have developed. And so for me, that was pretty dramatic, because I was seeing on one side the mobile internet was very poor experience. On the other hand, mobile apps before then were not really exciting. Distribution was lacking. You had some portals, but you still had complex installation process. Monetization was not included. So I got very, very excited when I saw that. And pretty quickly I was like, I have to do something in the mobile app space. And early 2010, that's when I decided to start App Annie. And in terms of mindset, so that was what the App Store was solving. But what I felt is that I was trying to understand more this market to see how I could build something in that industry. And I realized I was not really fully understanding this industry, what was working, not working, what was growing, what was not growing, what was truly making money, what was not truly making money. So I was looking for market data on this industry, and I realized there was no reliable market data on the industry. And on the other hand, what I saw is that Apple and others were providing some very limited tools for application developers, publishers to manage their apps on their portals and app stores. And I realized that there is also an opportunity there to help developers have better tools, not to develop on the engineering side, but on the publishing side. So that's how App Annie was started, on two sides, two angles. One, understanding, trying to provide answers to where is the market going. And two, trying to provide tools to developers, but business tools, to help them better understand what's happening with their apps on the business side.
You were in China, though, when you developed this company, correct?
Yes, I arrived in China in January 2009.
Yeah.
And we started the business in 2010.
Right, yeah. So and forgive me for being a little bit like adolescently naive about this, but you're doing a tech company. Fair to say, doing a lot of data and analytics for the app world, generally speaking. What was it like to try to do this globally from inside China? And I'm just thinking of the Great Firewall. What was it like? Is it better now? Was it worse back then? Is it even a thing? Is it naive to think that may have been problematic for you at all?
Yeah, I mean, it has never been a big problem because, as you probably know, there are a lot of big companies that have big teams, big staff in China. And these companies are foreign companies, obviously, especially American ones, from Microsoft to Google at the times to Yahoo to now one of the biggest SaaS companies, Zoom, has a lot of staff in China. So for us, it was a bit the same. We were not focused specifically on the Chinese market. From day one, we were focused on global markets.
Yeah.
In 2010, there was not so much smartphones in China. It started in 2012, 2013 to be really a thing in China. So for us, we are focused, at least early on, really on foreign markets from US, Japan, Europe. And two engineers in China are very talented, know how to use the technologies that are available in different places. And from day one, we were communicating in English inside the teams. We were having servers, all of them based in the US. So we just work as a very native cloud-centric type of company with no real hardware of our own, everything hosted, working remotely with everything. So it was relatively easy, I would say. The only issue, obviously, is that some stuff might not be accessible from China, but then you might have access to some VPN and stuff, at least for professional reason.
How strong was the mobile, and let's just say the app, as they say in China, APP?
Yeah. We are called APP Annie in China, not App Annie.
I was going to say, it took me a while to kind of get over and understand when people kept saying APP. I'm like, APP, is that WPP? Like, I'm confused. No, they just meant app, but that's how they say app. How strong was China's app game back in those early days of 2010, 2011, and how fast did they catch up and even overtake some of what the West was doing?
Initially, China was not really there. China was more about cheaper phones, was about SMS, so very few smartphones. And when the iPhone came out, it was very expensive. So it was very limited. It really took 2013, something like this, that people started to buy iPhones. And more important, that local Chinese manufacturers like Xiaomi started to provide cost-effective alternatives. And on the Android side, initially, at least you had Samsung, but now there's less of Samsung. So I think the rise of the local Chinese Android manufacturers was really big to transition China to smartphone. But Apple was definitely the one to start that growth, at least early on. And Apple could do it because at significant price point, because initially in China it was seen as a luxury good. And as you know, Chinese don't mind spending big money on luxury items. Mm-hmm. So in a way, Apple was surprisingly successful. I mean, unsurprisingly, given they could be seen as a luxury manufacturer. But I guess a lot of people were taken by surprise. And that helped China move faster in smartphones that appealed to luxury, at least early on. At some point, it had to become mass market to be successful in China, obviously.
Was that also the beginning of them starting to be internationally competitive with their app development game? Just even leading up to where when people started to look at App Annie and see Cheetah Mobile sitting near the top of the charts was so surprising to people, and they had no idea. How was it such a surprise, and how did that industry grow in China?
I think the industry changed quite a lot. Early on, you had a lot of smaller companies in China that managed to be quite successful on the global market. some like Cheetah Mobile, exactly, and there were quite a few others. There were also a few companies focused on helping international developers go into China. So that's another angle. And initially, the Tencent of the world didn't have so much success. It's only step by step that WeChat started to be successful. And only then, at some point, it's only step by step that Tencent went outside of the PC gaming to focus really hardcore on mobile gaming. So there was a few years, maybe until 2015, where there were a few Chinese companies with success in China and outside China that were relatively small, but pretty quickly a lot of the big Chinese giants of the regular internet started to take over that space, from Alibaba to Tencent to Baidu in some ways. So the smaller ones, you still have some that have Chinese roots and are successful globally, but are successful in local China, but less and less, I would say. Now it's the big giants. And of course, China has something exciting, is that they keep generating big giants, from a Pinduoduo to a ByteDance.
You raised a lot of money over your time, somewhere in the neighborhood of 160 million. I think. Am I getting that correct?
Yep.
Okay. And at one point, I think even in 2015, when you came and spoke at one of my conferences, the 10 by 10 that we did in Beijing, you were talking about how you had even back then just raised $6 million from IDG. And you actually mentioned during your talk that it was quite intentional and on purpose and important to you to raise from a local VC that also was globally minded. But can you talk again a little bit why you felt that it was important to raise money from within China along with some of the other contributors to your raise that may have come from outside China?
Yeah, so it was a total of 160 million. Our first Series A was 1 million, very small, and at the time we were calling that Series A. Now it will be Pre-Seed, I guess. It was with IDG Capital, so they were the sole and lead investor on this round. And for us, it was quite important because when you are a local company in a local market, you want a local investor to start with, and usually you also want local companies because they want to be close by. At the same time, for us, we were not the typical Chinese startups. We are not focused on B2C. We are not focused on Chinese market. We are B2B, which was really not typical in China at the time, and focus on global markets. So for us, it was key to work with also an internationally renowned and famous investor. And IDG Capital was one of the few, obviously with Sequoia in China, to be able to check that box. So for us, that was very very helpful, and I'm thankful for Li Xiaojun, who invested in us and is still on our board from IDG to have done that. And IDG kept investing at different rounds, Series B, Series C. So there was additional investment from them. They have all been following for a long time. So very happy to have them. I think it's very important, but at the same time, the more we became a fully global company, started to move headquarters at some point to San Francisco in 2014. We step by step gathered even more international investors, meaning investor base from outside China. So for our Series B, we got Craycraft from the US, eVentures as well as Infinity Ventures based in Japan, from Japan, with investing all over Asia. And starting our Series C, we were mostly focused on pure US investors. So we got Sequoia US for our Series C. For Series D, it was IVP, Institutional Venture Partners, and Series E was Greenspring, a fund of fund leading the investment.
How different is it to not only negotiate with Chinese VCs versus Silicon Valley or international VCs, and what is it like to have them, and what are the different nuances that they bring to the table when they're sitting on your board and they're on your cap table versus, like I said, Silicon Valley, American, European VCs?
If you're talking about a truly global Chinese investor, I think they are very similar versus some other type of investor in terms of mindset and how they think and their analysis and their view of the world. The more local is your investor, the more different it is. So it can be local Chinese investor, could be a local European investor. But if they are truly international, I would say the difference are not so big. Of course, there are Chinese origins, Chinese culture, mindset. But I would say the difference are not so big. If we had gone with a more local Chinese VC and investor, that things would have been probably quite different, I guess. But for us, the experience was not so different across investor. Where you see a difference is more per stage. Some investors are more experts at early stage, some at later stage, some at growth stage. So their knowledge and approach regarding product, sales, financial metrics are pretty different. So I would see, as long as you work with world-class investors, I would say it's more the stage where you see a big difference.
Have you noticed a change? Have they grown up? You must have had and obviously pitched to a number of very maybe local, less globally minded, more locally minded Chinese investor groups. What was their reaction to your pitch? How would that differ to the reaction that you might receive in the Valley? What kind of questions? What did they key in on? Where a Silicon Valley investor might say, okay, I want to understand the team. I want to understand the problem you're trying to solve. I want to understand the product, go to market, all that kind of stuff. Was it the same? And I'm almost more interested in how it evolved. How was their growth and sophistication of really listening to pitches, and then also on deal terms when they would offer you a term sheet? I personally watched them grow up and get a little bit more sophisticated and up to speed with better deal terms that were more in favor of entrepreneurial versus the early days, which they may not have been.
So we didn't end up pitching so many local Chinese investors. We pitched a few, but and again, IDG Capital is more typical of what you would expect with a global investor.
Right.
But the local Chinese we met, we got a lot of different answers. I mean, for some, being a French guy in China was already a no-no, not interested. For some, many being focused on global markets outside China was also a no-no. For some others, it's a B2B side. So there is a lot of this. I would say overall, in terms of sophistication, if we are talking about truly local investors in the early 2010s, it was definitely not the same level as investors in the Valley. I guess these days it has definitely improved on the local investor side. In terms of terms, some might be a bit more tricky than what you get in Silicon Valley, but usually Silicon Valley is the best in terms of terms that investors will propose. So I'm not sure their terms in China were so different from what you could see in Europe, for instance, from a European VC. So I would not hold that against them at all. And one thing you probably know, when I remember reading a study some years ago, so it's not very recent, but maybe 5 years ago, one of the big differences is that if you get a term sheet from an American VC, statistically lawyers analyze that you are going to execute on this term sheet with no material change to the terms in 90% plus of the case. I think that number with Chinese VC 5 years ago was closer to 30%, 30. So huge difference. There will be major change in the terms. And that's obviously a big issue as an entrepreneur, because suddenly you have negotiated exclusivity around the term sheet and material terms are changing. So they didn't say if the issue was more on the entrepreneur side or the investor side. Is it the entrepreneur who has hidden some stuff or misrepresented some metrics, or is it the investor changing their mind? But my impression was that it was more on the investor side that there was an issue. Some investor will try to preempt, offer good terms, and then pick some issues and decide to materially change the terms over some minor issues. So that was 5 years ago. That's, again, probably not representative of the best investors. We didn't experience that at all. But that's what I've seen in some metrics, and that's what I've heard in the grapevine.
I've read articles from a number of reporters or just tech interested bloggers who will and have in the past come to China, want to check it out. They come for a few weeks, they travel around and they go back and they write fairly attention-grabbing headlines like Beijing, the next Silicon Valley of the world. Did you appreciate it? What are your thoughts on trying to say that Beijing is the Silicon Valley of China? Do you agree or disagree? And your thoughts, generally speaking, on tech and innovation in China? Is it siloed into a Silicon Valley of China, being in Beijing, or is it widely spread out? And what does that spread look like?
Yeah, again, based on statistics, at least if you look at VC investments, and I don't have the latest numbers, but last time I checked, it was around 50% in Beijing and 15%, 1.5 in Shanghai, and the rest split around Shenzhen, obviously, and some other places. So I think it's true in some ways, in the sense that Beijing is the center of the tech industry in China. It's the center of the VC industry, VC investment in China. Is it Silicon Valley in the sense of exactly what made Silicon Valley successful or how it is today? There are obviously some differences, but one commonality, for instance, is the presence of top universities. You will have, of course, Beijing University and others, Beida. So it's you have that as well. Again, in China, all over China, not just in technology, I think there is an entrepreneurial spirit. So I would say yes, I would agree that there are definitely some very strong similarities. Obviously, Beijing is so different as a cities and Silicon Valley that on that level, the lifestyle and how people work and connect, it's very different. But practically, it has similar results, I would say.
Are there different areas around China that are hubs of different technologies where you might see commerce versus AI versus VR versus fintech versus, what have you? Is there a spread?
Yeah, I will agree with that. I think that if you think about hardware, for instance, Shenzhen is definitely the place to be, thanks to all the manufacturing happening in Shenzhen. And obviously it's the base for Huawei. You take Shanghai, you have Alibaba not too far, so e-commerce it's big, and obviously you have all these multinational companies based out of Shanghai. If you go into telecom and app industries, there was a lot more happening in Beijing. However, Xiaomi was started in Beijing. So yeah, Beijing is more core for, I would say, mobile app industry. But you will have some new regions popping up. Dalian has some level of success. There are some others in Western China. So it's like everywhere. There are some new stuff popping up, but the big stuff, it's Beijing, Shanghai, Shenzhen.
Before we look to the future, and I want to ask your thoughts on the future of tech, both inside China and out, I guess, which would segue into a discussion around your podcast that you do as well. But I want to take a glimpse back, something that's always fascinated me, which was the Shanzai movement of the cell phones. And somebody that you probably know as well as I do, David Lee, who started Xinjiang in Shanghai, and somebody who was a big kind of maker movement, early adopter from the Chinese perspective, talked a lot about, and it was his opinion that it wasn't Apple that killed Nokia and Motorola. It was actually the Shanzai movement that kind of did all the damage first, that Apple had the luxury of kind of taking advantage of. How familiar and how impactful from being in the mobile space were you as that Shanzai movement started to take over in China?
Apple really brought smartphones to China. Of course, Nokia was selling some smartphones in China before, but their strength was on the feature phone. That's what made them successful everywhere in the world. And yes, they had a top tier, super high-end options around smartphones that I would buy, but most of the world would not buy. But the move to smartphones, and at the time I was calling it super smartphone to separate Apple and Android device versus previous smartphones, because the concept, the approach was very different. It was full touch, it was an app store, it was a full, an excellent native browser to browse the regular internet, not just mobile internet. So that combination for me was making a super smartphone. So for me, Apple really killed it on that level. There is no question everywhere in the world, but specifically in China. And after that was closely followed by Android. And at the time, the Android was Samsung, but it was also HTC and others. But again, step by step in China, it was the rise of the local Chinese smartphone manufacturers that, for me, brought China to the world stage in terms of number of mobile internet users. Mm-hmm. So we talk about Xiaomi, Oppo, Lenovo, Huawei, all of these guys, Vivo. They are the ones who really brought smartphone to the masses.
Is there an area around mobile that China has almost gifted the world with their innovation that the rest of the world, if they're not already, should be paying more attention to and adopting, or even, taking what they're doing and localizing it for here? Something, as an example, maybe payments and what they're doing with payments. Is there industry leading tech and innovation that China has around mobile that the rest of the world should be paying attention to?
Yeah, I think so. I remember when I moved to China, the viewpoint was China is mostly copying successful business models and business from the West, and that was true of a Baidu, for instance, copying Google on mostly everything, doing it the Chinese way, but really taking inspiration from somebody else. Alibaba was already a different beast. In a way, you could argue that Amazon copied Alibaba. But I think especially with mobile, it started to change, and China has been leading the innovation on many levels. One reason being that the rest of the world, from Japan to Western Europe to US, already had the regular internet at scale, and regular players on this internet were not moving that fast to mobile. So in a way, China leapfrogged the regular internet, the fixed broadband internet, and moved directly to mobile. And so they had to invent, because the others were moving a bit slower, I would say. If you remember Facebook, initially it was not such a great app on mobile. They didn't invented WhatsApp, they acquired it. Where I think some companies like Tencent with WeChat did a fantastic work to reinvent what could be a messaging app. They were owning QQ in the past, but they managed to convert to something new. And drastically new very early on. And if you remember, for instance, WeChat initially was focused on the innovation was around talkie-walkie function. So it was about sending voice message. And step by step, it was not the case anymore. And step by step, they did new innovation. It was around payments. It was around mini apps. And it was just about the quality of the messaging experience, way better than other tools for people who have used WeChat. It's still world class, and it's a combination of not just social but communication tool, all in one. Where in the West you have separate tools for different approach. And on payment, it's very clear. Payment and e-commerce, China is one of the world leader. In e-commerce, it's probably very clear. In payments, electronic payments, it's also very clear. And it's leading so much the rest of the world that it's not even fun to compare. So I guess with COVID, the rest of the world is catching up to e-commerce, but China is still leading by far. So the numbers are pretty crazy in China.
Now that you're based in the U.S., you're in San Francisco, and you look back, what can you say about why were Huawei and Xiaomi, why did they do so well? And now, especially Huawei hit and has fallen on a bit of tough times. What is the future, in your opinion, of Huawei and Xiaomi? So what were they so good at and led them to be so successful, so competitively successful on the global stage against, the Androids and the Apples of the world? And then now with the current situation, what do you think their future aspirations could be?
Yeah, it's both have been widely successful. I'm probably a bit more impressed, relatively speaking, by Huawei because they are so much bigger, but not just so much bigger, but they are doing so many things from building a telecom equipment products to handsets to building their own. They are building their own chips. So it's a much deeper play at a much bigger scale than Xiaomi. And no offense to Xiaomi, it's a widely successful company.
Mm-hmm.
Xiaomi chose a different route, which is I'm going to use off-the-shelf component and try to provide a simpler, good quality UI on top of it, but focus on Chinese customer needs. And I will integrate that with some other hardware and some other services, and I will try to make money from other services and hardware. So a different approach. In some ways, probably a more risky approach in some point, because at some point anybody with some scale can build an off-the-shelf phone based on off-the-shelf components. At some point, it's your operational efficiency first and for all. So it's a bit more dangerous game. I think the ones that are more vertically approaching phone manufacturing, from Samsung to Huawei to Apple, have a big advantage. They can drive innovation much better. They don't depend on the latest design from Qualcomm to differentiate their phone. Actually, they cannot differentiate their phone because their competitors will have access to the same chip. I'm more bullish on the ones who control more their own destiny, but obviously in that game only Apple fully controls their own destiny because they also own the operating system, which is not the case for Samsung and Huawei. So, and at the same time, if we look at the bigger geostrategic picture, geopolitical picture, Huawei is doing so much in a way that it's creating risk for itself to be seen as a potentially dangerous actor by some, right or wrong. And I think that might be on the global stage a more difficult approach, at least within developed markets. I think for Huawei in developing markets, it's a different story. I don't think these issues are raised. But at the same time, there is a question of how you manufacture phones if you have huge constraints on some parts of your supply chain. So life might get tougher for Huawei, and obviously this can only be solved at state level, meaning US and China negotiations and discussions and agreements.
I feel like I should ask if you understand what I meant by Shanzai, but I don't know how much of many people in our audience would understand what Shanzai or the whole Shanzai movement is. Would you maybe be able to take a shot at trying to explain to people what was this Shanzai movement that we were talking about?
Shanzai movement, at least my own perspective, was more about the cheaper manufacturers of cheaper feature phones, usually, at least early on, which started mostly as counterfeit from other phones and products, and built inside Shenzhen factories, usually being brandless or with a fake brand, at least initially. And step by step, I think this started to disappear and being taken over in a way by the local Chinese smartphone manufacturers.
As I alluded to before, you are also now a fellow podcaster, and you have the podcast Tech Deciphered. So why don't you tell us a little bit about what is Tech Deciphered, what do you guys talk about, and where can people find your podcast to go listen to it?
Thank you, Todd. Yes, I'm happy to be podcasting since the past 6 months. My show is Tech Deciphered, and I'm doing that with my co-host Nuno Goncalves Pedro. And basically, the idea is to try to decipher what's happening in tech in general, tech from a perspective of an entrepreneurial perspective, or a big tech perspective, or a venture capital perspective, and try to talk about different topics. So each episode, or 2 or 3 episodes, will form a series, and we'll talk about different topics from SaaS to what happened in the last decade or what we expect to happen in the coming decade. So different topics that we pick. We don't really have guest speakers, but it's just us, me and Nuno, as your co-host, talking about these topics. And both of us, we have a background in VC, entrepreneurship, and definitely tech. And we both have lived across US, Europe, and Asia.
Thank you very much for coming on the show. Stay safe and stay healthy.
Thank you so much for your insightful questions. A pleasure to be on your show, Todd. Thank you.
Growing a company is hard. Doing it in a foreign market? Exponentially so. The best piece of advice I can give you is not to do it alone. When you start looking across the pond for further expansion possibilities, and I sincerely hope that you do, make sure you choose the right partners to do it with. My good friends at WPIC Marketing and Technologies have almost 20 years of experience helping brands just like yours enter China. I hope you enjoyed this episode of The Negotiation, and if you're interested in being a guest or want to connect with me or any of our team, please reach out to us at podcast@wpic.co, and be sure to rate